Hey guys, it is Julie here with TipRanks, and today we're taking a look at 4 great monthly dividend stocks, so let's get into it. Alright guys, welcome back and thank you all so much for being here. Now you may know I am a big fan of dividend stocks, so today we're taking a look at 4 companies that all pay out their dividend on a monthly basis. So this is great if you're looking to collect some of that steady passive income, and some of them have yields of over 14%. Now, just before we get into these monthly dividend stocks, this is a reminder that if you enjoyed today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Also, there'll be links down below if you're looking to download the TipRanks mobile app to access all your favorite research tools on the go. Now, let's jump right into these 4 monthly dividend stocks. Now, we're going to start off with the obvious, with a company that has dubbed itself the monthly dividend company, and that is Realty Income. Their stock trades under the ticker O, currently priced just above $61 per share. They do have a market cap of over $40 billion. Now, the stock is down about 14% this past year and down 6% in the last few months. Realty Income is a REIT, or Real Estate Investment Trust. Realty Income focuses on high-traffic retail properties that are generally considered recession-proof. They have over 1,200 commercial properties under long-term net lease agreements across 84 separate industries. With a large presence in America, they also have properties over in Spain and the UK. Some of their largest tenants include 7-Eleven, Walgreens Boots Alliance, FedEx, and Home Depot. Realty Income has paid over 600 monthly dividends, and since their IPO in 1994, they've also increased that dividend 120 times, making the company a dividend aristocrat. That monthly dividend comes out at 25 cents per share currently for a dividend yield of 4.89%. Their next ex-dividend date is coming up soon on April 28th. Taking a look at Wall Street's opinion on the Realty Income stock, it currently comes in as a strong buy based on 6 buy ratings and 2 holds. The average price target comes in at $70 per share for an average upside potential of 14%. And we have some recent ratings just within the last couple of weeks. On the low end, we do have our couple holds with upsides of 7 and 11%, and our recent buy ratings go as high as 20% upside. Second on our list today, we have another REIT, and you might start to notice a theme with that for these monthly dividend companies, with Stag Industrial. With a market cap of over $6 billion, the Stag Industrial stock trades under the ticker STAG, currently priced above $33 per share. Now, they are also down about 16% this past year and down 1% the last few months, but did see gains of 23% in the last 6. As the name may suggest, Stag Industrial is focused on industrial properties across the United States. Stag currently has 562 buildings across 41 different states, and they've seen their cumulative leasing activity increase steadily year over year as they've grown into one of the largest owners and operators of U.S. industrial real estate. Approximately 40% of Stag's portfolio handles e-commerce fulfillment, and one of their largest tenants is Amazon. Their next earnings report is coming up soon on April 26th, where analysts are anticipating earnings per share of 17 cents, and Stag does have a long history of coming in ahead of expectations. And that monthly dividend that they pay comes out to 12 cents per share for a current dividend yield of 4.4%. We do have a few more mixed opinions on this stock from analysts. With 7 current analyst ratings, the stock does come in as a moderate buy. With price targets ranging from $33 up to $42, our average comes in at about $37, which would be an upside potential of nearly 12%. Looking at our more recent ratings, we do have some holds within the last couple of months, but on the high end we have a recent buy rating with an upside of 25%. Third on our list, we're now moving into some of those higher dividend yields. We have a REIT with AGNC Investment Corp. With a market cap of about $5.7 billion, this stock trades under the ticker AGNC, priced just shy of $10 per share. Now, they are down 11% in the last 3 months, but gained 35% in the last 6, fairly flat over the past year. AGNC invests in mortgage-backed securities. They generate income from the interest earned on their investment assets, net of associated borrowing and hedging costs, and net realized gains and losses on their investments and hedging activities. As of the end of 2022, they had $59.5 billion in their investment portfolio. AGNC also has an earnings report coming up here pretty soon on April 24th. Analysts will be anticipating earnings per share of 66 cents, which is down slightly from the year before, but once again we have a company with a pretty solid track record of hitting those expectations. AGNC has a massive dividend yield coming in at over 14%. That monthly dividend comes out to 12 cents per share for a dividend yield of 14.3%, and their next ex-dividend date's coming up soon on April 27th. Now, these guys attract a bit more analyst attention as they have 9 overall ratings, and overall come in as a moderate buy based on 6 buy ratings and 3 holds. The average price target of $11.54 would be upside potential of nearly 17% from current prices. And all of our ratings within the last few months range from 11 to 26% upside. And last but not least, our fourth REIT is SL Green Realty. And this is perhaps our riskier of the bunch today. Under the ticker SLG, they're currently priced at $24.51 with a market cap of about $1.5 billion. Now, these guys are a way off from their 52-week high of nearly $70 per share. SL Green is the largest office landlord in New York City. They command interest in 88 buildings totaling more than 38 million square feet. Several other big properties, such as Vanderbilt Avenue and Madison Avenue, have 0 availabilities, and they're working on refurbishing several projects on Park Avenue. SL Green is another REIT with a massive dividend yield, but of course the decline in their stock price this past year has had an effect on that as well. Their monthly dividend is 27 cents per share for a current dividend yield of over 14.5%. But analysts are a bit more wary of this stock. Overall, it does come in as a hold. That is based on 13 different analyst ratings with 2 buys, 8 holds, and 3 sells. The average price target does come in with an upside of 37%, but we do have a wide range from $84 to $18. Looking at our detailed list here, a lot of ratings coming in just the last couple of days, and those do range from downsides of 10 and 14% to a massive upside here as well. So there we have 4 REITs, all with monthly dividend payments. Now, keep in mind that REIT dividends are taxed as ordinary income, so just something to keep in mind before making any investment decisions. These videos are never suggestions to buy or sell any specific stock and are just meant for information and entertainment purposes. If you made it to the end of today's video, make sure you hit that thumbs up button and let me know some of your favorite dividend stocks in the comments down below. I always appreciate hearing from you guys. Thanks so much for watching. Have a great day, and I'll see you back here next time.